So I am trading the the Asian session model. There's really no higher time frame narrative around this. That's because essentially that's what the Asian session model is. It's not targeted towards trying to capture sustained price runs, because the entire purpose of Asian sessions range is typically to gyrate back and forth to induce, no, I'm just kidding, to create liquidity for the daily range. So how this model works is essentially you're using the new day opening gap as the main, not the drawn liquidity, but you're using the new day opening gap. We use the new day opening gap as a magnet. ICT covered this, I forget which lecture, but he was covering it so that people that aren't able to wake up or be up or be on the charts during silver bullet or 8:30, whatever time frame, he's just giving everyone an option, an extra option to be a little bit more flexible with his model, with his concepts. But anyways, so you mark out the first print at 6 p.m. and then that time range from 6 p.m. to 7:30, you are looking for the buy side that is formed and the sell side that is formed within that range. And you're essentially waiting for one of those pools of liquidity to be rated, and you're pretty much just waiting for a lower time frame smart money reversal. And most of the time you do want to see your draw on liquidity be somewhere in the general facility of the new day opening gap, because that's going to act as a drawn price to come back. So I have the equilibrium range marked out of this initial range. The new day opening gap kind of lines up around the equilibrium mark, and I had this marked out, the initial sell side liquidity, and I was looking how far can it go if it wants to run this liquidity. We can't use this volume imbalance because it's above slash does that to me every single time. ICT just jumps on my cursor. Bro's not ICT. But because it's within this volume imbalance, it's already traded to it. We can't use it as a train stop. You know, those things that trains have on their rails for runaway trains. Well, it'll keep pushing past until it seeks inefficiency, and it can't use this because it's already traded to that. So I was looking at this inefficiency right here, this buy side imbalance, sell side inefficiency, to hold price up in the event that we run this sell side. And if not that, then we have this wick, which I prefer that we use this wick. Why? Because this wick is already traded into the consequent encroachment of this wick here. So I would prefer that price respects this wick right here. I'm going to go to a 15-second for a moment to see if it showed any kind of respect for this upper one. So it did not. It's okay, because we did not enter anything. So, and we're not using this upper wick. It still can, because the bodies have not closed outside of it. But I would prefer that after we take these sell stops, that price ends up coming back up into this with some degree, but who knows. I am going to look at this really quick, just because it doesn't feel right. Okay, so I had this marked out. This is simply just a 2-day look back low. This is September 3rd. That would have been Tuesday's low right there. Actually, I'm just going to use this. It's more reasonable to use a higher time frame wick. Build your narrative off of a higher time frame. So yeah, this 5 minute, 15 minute wick. So this 2-day look back low, ICT says if you're long biased, preferably you're buying below a daily low within the 3-day look back. I'm gonna wait to see if we show any kind of respect for that, because I'd prefer that I do not enter something and then get demolished. But so essentially just waiting for confirmation. I want to see, okay, so both of these are taking this low. Actually, let's go find the first presentation. So we have 9:30, this would be first presentation right here. We're going to take this. Look, right inside that first presentation. Gonna go over here. And (9:30) opens, and then this is first presentation. So I like that we're slowing down right inside of this right here. This 2-day look back low. I'm gonna drag this over. So running right below that 2-day look back low. Oh, I need to slow down here a second. Right inside that first presentation. That is just beautiful price delivery. So yeah, this looks pretty alright. I like this. Comes to the consequent encroachment of this. I'm just gonna look for, preferably we had this small consolidation in here. This preferably stays open, so I look to accumulate anything inside of this area. Extend right. Your stop loss would, see how we're just pausing here very quickly. I would just throw it at the low, so then 18 points. MNQ. I guess 4.4 cons. We'll throw it on right there. Right there. Okay, I probably could have waited for a better entry, to be completely honest, but that's what it is. Just a quick little something. It's nothing crazy. I honestly haven't even back tested this yet, so, but I mean, it's like one of the most simple models he's come up with so far, so it's all good. So this is going to be stop losses managed first and then partials, right? I don't want to see anything like this. I want to see it be relatively quick to get up and away from this, especially through this imbalance here. See what these are doing. it might want to draw into this little inefficiency here in this volume imbalance. So I'm just going to annotate that right here. Just watching to see what price is saying. Actually, realistically, this should be... I don't want to put it right there. I'm not going to touch that. Okay, I'm just going to leave it where it is. So I want to draw the attention quickly to how we are supporting bullish arrays. Comes down to the consequent encroachment of this inversion wick right here. Volume imbalance, fair value gap, that's a really high resistance area. The probability of this trade working out goes down quite drastically if we get through this little patch of price action right here. So now that we've had this little run higher above this short-term high and into this premium, if we manage to run above any of this, then I'm rolling my stop here, because this is kind of a point in price action where it's like the tipping factor. If price is bearish, it's going to come up and retrace and take some form of buy side liquidity, and it's going to deliver that buy side liquidity into inefficiency, into buy side inefficient price, right? So if this is essentially going to be a turtle soup, so this is at the same time this is a breaker that we're trading, it's also a potential breaker like this if you're offside. So okay, essentially what I'm trying to say is, if you are incorrect, you will know right here, because price will support bearish arrays after sweeping internal liquidity and delivering to inefficiency. I'm watching this fair value gap right here. But if it is, price is bullish if it does this, if it doesn't respect this premium array, and then it comes back above this 1 minute imbalance like it does here, and then comes back down into it. So now I think I'm more than comfortable 2 minute, 3 minute, 4 minute, 5 minute. I do want to see a little bit of speed in a second. We've just entered this macro. So 750 to the 810. I want to see price run relatively higher. So this is the first time I've used the first presentation for value gap or even traded Asian session, but it's really simple. And I mean, if you just follow the instructions ICT gives you, he's not going to give you a model that doesn't work. There's relatively no rules to it from what I know. There's just, yeah. In a second here, I'm gonna focus. Stop yapping. So that's a nice little institutional order flow entry drill. You would want to see price do exactly as it is, staying mostly above this high. Stay mostly above this consequent encroachment right here, and then you really want to see some speed above this high. So this is nice. Again, I'll draw it out. I might go to a 5-minute here and see what price is forming. So pretty much what we're trading is this breaker, right? But at the same time, this could, if you're offside, this could be a soup of this internal range liquidity filling into an inefficiency. And if that's the case, then price will do this. Upon your entry inside of this breaker, it's going to, if you're incorrect, price will come back up like this and then go lower. That makes sense. But the same is true for the other side. If you are correct, then price will do this. It'll come down into your entry, and then generally from this range high to low, displace through that range high, or through that equilibrium mark, and then go higher. So that's essentially what we're working off of. So I'm going to manage my trade and find where I'm going to take a take profit. I'm going to target 5 handles. I'm just kidding. So because this is the dealing range we're working in, we have this order block at equilibrium. This is relatively high resistance order flow. With the balanced price range right here. And order block right here at equilibrium. So I could look to take something off here. I think I will. Because price is going to do what? It's going to either seek premium arrays or inefficiency above the marketplace. Sorry. So that's what we're going to do. I want to see price reach at least into a premium of this inefficiency here before deciding to slow down. So 5-minute, 3-minute is where it first appears. And if there's any inefficiencies residing within this 2-minute. So that's going to be the first partial, right? Yeah. I want to see price get above this. That's my next thing. Beautiful. So we should get a little bit of speed here. I'm gonna buy one more. And then I think I might, just because I added that other one on, I didn't want to just take the one that was like a quarter of the position right there. So I didn't want to just have a little bit of profit. I think I'm just going to take, since the trade is pretty much at break even now, I think a healthy amount to have taken in profit in an instance where price would run all the way back would be right there. So again, within this 5-minute imbalance that we're expecting price to deliver to, we found a 3-minute imbalance. I'm going to go into a lower time frame and breathe. I'm going to go into a lower time frame and I'm going to find anything that resides in the premium of this, because I'm long biased, so that would align with that, because I don't want to see price. If price just reaches up into the lower end of this inefficiency and decides to not respect it, like, you have to give it a little bit of time. But if you give it a little bit of time and it doesn't respect it, well then I should just probably exit full anyways. But if it's going to continue to do what I want it to do, it's going to reach up into here. That's the if it's really weak and I'm needing to take off my majority of my position, it's going to stay within this lower half. But if it's going to do what I want it to do, best case scenario, it's going to excuse me, it's going to reach up into here really quick. And then the first place where I'd really anticipate it to have any chance of reversal would be in this order flow here. So 1 minute, 2 minute. I think I was wanting to see something. So here again, next thing I want to see is that order, that I don't want to see the crazy respect of this lower end of this order block. You can see a delivery to the consequent encroachment of this inversion wick, and that's a really nice close above that. Partialed 1, or sorry, partialed 2, and now we are in a winning position. So we have $100 realized, and we have a break-even stop loss. So this is a winning trade. Very well managed position. If you notice, ICT does this a lot. It's the fundamental of pyramiding. You're entering the majority of positions at the lower end, and then you get confirmation, and then you set your partials before. That's a random level, right? Yeah. If you sorry, I'm a little shaky right now because it's like literally freezing cold in my room, and I'm in a trade. I'm not even gonna lie, but you pretty much set yourself up for the best success. And this is how ICT says you don't have to be right in order. Like, this trade could reverse on me right now, and I wouldn't really care. That's relatively nice. So if I take another one in the average entry, I'm gonna take one more as it comes up into this. Actually, no, that's stupid. that's not stupid. It wouldn't make sense for me to sell 2 right here and then add another one. I could have just held, but no. So you want to put the majority of your position on at the first place where you're going to wait for confirmation. After you get confirmation and your trade invalidation gets pulled up to here, trade invalidation is where you no longer want to be in the trade because the trade is unprobable, not where you throw your stop loss. So if your trade invalidation is right here, so price displaces above here, if it comes back below here, I want to be out of the move anyways. So if you have your main position on here and your trade invalidation is here, if I'm able to take another pyramid entry and the average of my trade's position is still beneath that, is still beneath that invalidation, then it's good because you can roll your stop to break even, and then it's still below the invalidation. And before you would do that, you would have had partials taken as such. But anyways, so next will be 2 at the low of this new day opening gap. I'm going to see if I can find any kind of projections here that may line up. 2 to 2.5 is likely where we're going to get retracement. See how you want to be buying below this 2-day look back low, and it's not random. I mean, you can see price has been gyrating around it. It comes down below this daily low to the consequent encroachment of this daily BISI, gyrates around it. Back to it right here, fails to get below it, and then at a specific time that we're looking to participate, it comes below this, and then coincidentally, it just so happens to have traded as ES is trading into this 2-day look back low. MNQ just so happens to be trading into the first presentation. First presentation isn't always going to be something, but if you can just know what you're, that's a soup right here. Below this low, back into this. Balanced price range. No, back into this inversion inefficiency, so technically it's reclaimed. It might want to come back and run these lows one more time. If it runs this low one more time and then runs that low one more time, the short-term low that is formed after taking this low, I'm going to put another partial at, and I'll let it take me out in a partial, because after it comes into this balanced price range, this was that first area where I said is the first area where I would be concerned for price to really reverse. I think it's improbable right now for price to do that. I think it might just need some time, because obviously Asian session you need to have a little bit more patience. But yeah, so I'm gonna go ahead. I was just checking the partial, sorry, I got sidetracked. So this is the new day opening gap. Is ES likely to hit that before MNQ? Possibly. Look at this delivery. So I'm going to wait for this to form a short-term low, and this low gets, if it comes back below this low, I don't like that. If it comes back below this low, because we've just reclaimed this inefficiency, and it's like a battle of the premium and the discount. Is price willing to, it just dropped below the sell stops and is reclaiming this inefficiency and delivering to this inefficiency. Price shouldn't show respect for that, for this premium, and it shouldn't show respect for this premium and go back below this low. So in case it wants to drop down below there, I'm gonna throw a sell stop of 2. And it looks like it might end up wanting to do such things, but on the 1 minute you can see price is very nicely staying out of this 1 minute. It's very hesitant to go below that. So this is pretty decent volume for the Asian session. Immediate rebalance. This is nice. So in the event of something crazy happening, I want most off at the end of this, or at the low of this new day opening gap, because that's pretty much the minimum threshold that I demand price to deliver to. It'll probably take off within this next candle, but limit sell. I'll limit sell 2, and then the final take profit will be the initial buy side liquidity. I could aim a little bit higher. We'll see how we feel once we, actually no. I was gonna say we can see how we feel once we get up here, and then Oscar, you good? All right. We can see how we feel once we get up here above this buy side, and then potentially reach up into this new day opening gap that we can see price has been. I had this on my chart from the AM session, but we can see price has been gyrating around it as well. It might want to act as a draw once again. It also aligns with this buy side inefficiency, but because again this model is not for sustained price runs, it's for short term simple bread and butter approaches. So price just displaced, just smashed through that new day opening gap, and it might even continue higher. I'm about to get my my majority off right here. 15. Oh. So we'll see. Hopefully we don't get anything funny where it comes up here and goes down before we get that last little bit off. Just in case it wants to get really animated. And then I'm also going to pull off this 2-day look back low. Put this into Notion. Just put it into a random page for right now. So that's that 2-day look back low. And then there's our majority partial. So then you want to remove this so that you don't get put into a short after if it takes you out. So we can see that, and then the final, this is take profit, right? Final take profit can be at that initial buy side liquidity. Now, this is like the most simple approach that I've ever traded, and I'm not going to say anything too much because I literally have zero data to back it up, but it's doing better than my actual AM session model. But I mean, it makes sense, right? Right now it makes sense. It's random. Right. Or sorry, not smart money. Likely to run up to this buy side liquidity, I feel is pretty relevant. I would cut it short, or I mean I would pull out an extra 15 20 ticks, but I think that for Asian session that this is pretty reasonable. Now, where do I want this last contract to be out? I think that this should be where this is a market maker buy model, and this is low risks buy, first stage of accumulation, or sorry, first stage of distribution. This should be second stage distribution, redistribution. So if price decides to run back lower, it can build liquidity in turtle soup, but generally after that turtle soup, which shouldn't take up more than this range here, I don't want it, so this inefficiency high to low, low to high right here, I don't want it to come back below this candle. So this is a good place where I can set the trade and forget the trade. I don't really think that it's necessary to show, actually, also, as this takes that Asian session buy, or not Asian session, this is Asian session, as this takes this initial buy side liquidity, if this hasn't also reached up into there, I will close the position on suspicion of SMT. So I'll probably give it a good, after this reaches up in there and delivers through this, I'll give it, if this hasn't already done that, I'll give it another minute, and if it hasn't, then I'll close the position. I need to go back into this video and gather all of the management portions for my journal, because I forgot that I actually have to collect data on this. "15 seconds, see how things are going." If it wants to jump up through there, I'll give it a little bit. How far can this deliver? It's kind of, I mean, obviously we can find consequent encroachment of this, but that's kind of, there's the rest of this buy side inefficiency here. So did I already put that in there? I did. Yeah, this is definitely the best managed trade that I have. It's very, very, very beautiful trade, and not because of everything that you expect it to have been qualified as good as, but because of the simplicity of the framework of the trade, the management, the understanding that how far can price go. Oh, I'm tired. Still have to work out after this and everything, but besides the point. Let's focus for this last couple minutes before we close out. As it's reaching up into here, I think I'm just gonna try to let it do its thing. If it came back down here, I would probably be alright closing that out. So I'm just gonna leave that stop there, and I'm gonna run to the bathroom. Hopefully I come back and it's closed out, we're done, and I can go journal and read and work out and go to sleep. So this might actually want to come back down to the top of this new day opening gap. Yeah, I don't know. Yeah. Alright, I'm gonna close right there. Yeah, alright. I'm really good with that. The reason I closed that was because I was looking at this earlier. I was like, if price ends up managing to get up here, then the last inefficiency that I would really have my eye on would be this inversion that sent price lower on the left side of the accumulation side of the curve. So if I can just find that. We can see this fair value gap gets respected here. As I was saying before, ES already ran this buy side liquidity and pretty much reaches up into the consequent encroachment of the remaining buy side inefficiency, and at the same time NQ is failing to take this high, and we're inside of this last inversion fair value gap that price fails to get within. And then you can also see it reaches up into this tiny little volume imbalance before going lower. So I'm really happy with how I managed this trade from beginning to start. The management, the invalidations is just beautiful. I really like that I pyramided majority here, and then once price got above the point of invalidation, then it might soup this, but I'm not interested in it because it might immediately rebalance, come down into this new day opening gap. But there's still a possibility of this souping, this short-term low going lower, and then we'll probably see ES fails to do so. But I'm not interested in that. It's or whatever. I got my portion of the meal, or the lion's portion. So where was I? So once price gets above my initial invalidation level, if it comes back down here, I want to be out of the trade anyway, so I just add another one and roll stop to right there, which would end up making the trade break even. This would have been final TP. But take a very logically placed stop initial partial, stop myself from making an irrational decision here of adding another one back on, which doesn't make sense. And I think I called that in here. I said price can come down and soup this low, but the short-term low that gets put by sweeping the short-term low and delivering to this inefficiency and reclaiming this gap, this inefficiency, I don't want to see that taken. That's where my stop was rolled. Another partial at a logical level. I would have rathered I took this I'm not sure why this was taken right there. It was supposed to be at the at the bottom of the new day opening gap, and then final once I identify that price is potentially failing. So Beautiful trade. I mean, I guess on to the next. It was, yeah.